Hi everyone, welcome back to my channel. Today we're going to talk about my stocks and shares ISA on the Trading 212 platform. I just want to start by saying this isn't financial advice at all. I'm not qualified to give advice. Please don't use this video as advice. It is just what I've done, and you're welcome to ask me questions about it, but you need to make up your own decision when investing. Let's start with the type of account that you can open on Trading 212. You can open a cash ISA, you can open a CFD account, you can open a stocks and shares ISA, or a general investment account. Personally, I'd steer clear of the CFD account because I am not familiar with that whatsoever. In a stocks and shares ISA and a cash ISA, you can currently invest £20,000. So if you have £20,000 or less to invest, I'd start with those. And if you have more than that, I'd still put the £20,000 in those accounts and then move on to a general investment account. On the screen now, you can actually see my stocks and shares ISA and my current value, so £401.92. So over the last few months, I've actually withdrawn quite a bit from this account because I have used it for my house renovations, but I think I've left roughly £400 in there, and the value you can see now is where it's gone up and down since. So Trading 212 are actually what they call a flexible ISA. So where I've taken money out in the tax year, I can replace that same money and it won't go against my allowance. So just now I'm going to show you, I'm scrolling down so you can see I've got £20,000 remaining, and you can just see my holdings there where I'm invested. And I'm just going to go into what I call the American pie. You see there was also a British pie, but we'll look at the American one first. So you can set these up yourself. You can set your own goals. You can set whether it's going to auto invest or not, and whether you want to share it publicly with other people on the platform. On the holding screen, so you can actually see what I've invested in this pie. You set the percentages of the pie has to add up to 100%, but you can set it using the bar as to how much you want in each share. And then based on how many holdings you have, depends on the minimum investment. And here's a little explanation for how that's calculated. So for this pie, I have to invest £6.67 each time. You can invest more. You put £10 in, for example, if you wanted, and it will calculate it for you. So it doesn't just buy whole shares, it buys fractional shares. Now I'm just showing you the British pie, so same thing. I've set my own goals there. I've set it to reinvest. And I'll just show you the holdings. So if you're from the UK, you probably recognise a lot of these companies. So again, so obviously you've got to have 100% in the pie. You'll see how I've split these out here. And you can invest without putting things into a pie. So you'll see I've got Rolls-Royce there. That's outside of the pie. And then I've got my ETFs. So I've got Vanguard, FTSE, All World, Accumulation Fund. And I've got the Vanguard S&P 500 Accumulation Fund. And then I've got Zim, Integrated Shipping Services. And really I chose this because of the dividend that it produces is quite high. It's 54%, 54.6% you'll see there. And these dividends I think get paid quarterly, even if the value of it, as you see on that screenshot there, has dropped today. So now we'll just quickly go into my holdings and why I chose them. Remember, this isn't financial advice whatsoever, so please do your own research. So first up we have the American Pie. I try to invest around £10 in this each month at least. So I put my life into the pie because years ago, we're going back about 15 years ago, one of the first companies I ever worked for did administration for MetLife. At the time, I'd never even heard of them, but they were absolutely huge. I think they were something like in the top 10 companies at that time in the US. They've got their own building, the big skyscraper in New York. So really, that's why I chose them. Apple, I went for because it's quite self-explanatory. They're huge. Yeah, so Apple's like a big company in the US, isn't it? I think we've all either used or maybe you're even watching this video on an Apple product. Meta platforms, because Meta is kind of in everything these days, so put some money in there. Tempest AI. Tempest AI seems to be a huge company in the US, the healthcare provider. And as we know, in the US, they have to pay for the healthcare. So I thought that it might make some money. And finally, AbbVie or Vi, I'm not sure how you pronounce it, but they're a pharmaceutical company. And again, I think that's big business in the US. Also, all of these are dividend payers. So at some point, I will get a dividend from those. Up next, we've got my British pie. So starting with Rolls-Royce. Actually, at the time when I first invested in Rolls-Royce, I didn't invest for dividend purposes. I just thought that they were probably going to become big or bigger. They might have increased, but they've since now started paying a dividend. Next, we've got Aviva. So that's the majority of these are going to be dividend payers, and that's the reason why I kind of went for a lot of them. So Aviva is finance company. So I also picked BAE Systems, defence company, thought they might do all right. BP, oil company, always in the news, but again, dividend payer. British American Tobacco, massive dividend payer. HSBC, I thought of the banks that I could have chosen, that they were probably going to be the better of all of them. Rio Tinto. Now, this one hasn't been performing that well. In fact, this is probably a bit of a rare day that this is showing green. Rio Tinto is a mining company and they pay a dividend. And then we've got Tesco. So Tesco are a huge supermarket company in the UK. They kind of at one point had the monopoly on the supermarkets. I think they've since bought out places like One Stop, so I thought they might do well. And then finally, the Sage Group. I chose them because HMRC, I think, are starting to go a bit more digital, and the Sage Group is a big payroll provider, big accounting provider, so I thought I'd go for them. Next, I'm going to show you the holdings that are outside of the pie. So first up is Rolls-Royce. I know I already have them in a pie, but I wanted to hold them separately so that I could invest more into them, really because I thought that they might do well, and thankfully they have. You can see in the chart how much that's increased. Next is the Vanguard FTSE All World Accumulation Fund. I chose this one mainly because I followed a YouTubers called the Donegans, and they suggest going into an all-world fund because it covers the globe. And I'll probably concentrate more on ETFs going forward in my portfolio. So hopefully you'll see me investing more into this one and into the Vanguard S&P 500. Basically, Vanguard, it's like a fund manager, and they have people that will do the work for you. So rather than doing individual shares yourself, they'll have someone in the background that's constantly moving your money in and out of companies, well, for this particular one, for the all world, so companies that are represented across the world. Other funds are available at fund types, like you could get a dividend fund, you could get an income fund. So the dividend fund would pay dividend into your portfolio. The accumulation fund will basically just keep accumulating in that particular holding. And the income fund, I think that basically just pays income into your portfolio. I haven't ever held one, so I don't know how that works. And finally here we've got the Vanguard S&P 500 Accumulation Fund. So this fund follows all of the companies that are in the S&P 500 stock exchange. So that's an American stock exchange, so it'll be the top 500 in that particular stock exchange. And it traditionally does quite well. I think the last few years it's gone up by 10%. So hopefully we'll see some continued growth there. So here's just a quick look at my dividends that I've earned in August so far. So I've had 22 pence from British American Tobacco, 1 penny from Apple, and 16 pence from Abbey V or Vi. I don't know how you pronounce that. And you'll see further down, like, so back in June, I had a dividend of 27 pence from Tesco. And that's just for doing nothing. It's a great passive income, isn't it? Just having your money sat in some stock, you're not touching it, and seeing the money roll in. I think what I'm going to continue doing is I'll put little amounts into what I call my British and American pies. Those are the dividend holdings, if you like. They're the holdings that get dividends, and then I'll continue to put more into the funds, so the S&P 500 fund and the FTSE All World fund, and we'll see how the growth progresses there. And then finally, so previously I did have a small cash holding. I think I had something like £17 just held in cash. And you can see that you do get interest on the cash held. I think it's paying something at the moment, it's like something like 3.25% if you've got any cash. If you might just have cash because you're not sure on where to invest. But like I said, this is personal finance, so you've got to do what feels right for you. Please don't feel that you have to copy what I've done. It is just personal to me, and like you've probably noticed in this video that the stock market has gone up and down whilst I was filming, because my holdings did change throughout me filming this. But that is the nature of it. It will go up and down. I hope you found this enjoyable to watch. If you've got any questions, please leave them in the comments below. Maybe I can do a follow-up to this, and I will certainly do a follow-up probably once a month, so you can see where my portfolio is at, and we can go through what dividends I've earned in the previous month. Thank you very much for watching. Please consider liking and subscribing. Thank you. Bye.